Go ahead and record this. Okay, so what I wanted to show here is running one shot this morning at the high energy time on the equities. And I do have a dollar index chart to show too. This is EMD, it's $10 a tick. It's one of the ones we watch in the room. And you can see here that running one shot, it got into a trade. By the way, just to make sure everybody's still awake here, anybody tell me what type of trade it took here? I know it's a long, but what type of trade? One shot only takes two by default. So you got a 50-50 shot. What type of trade did one shot take there? Anybody? What type of trade did one shot? This is the auto trader. Takes one contract, 15 tick initial stop, so your initial risk is $150. That's right, probe trade, yellow bar probe trade. That's precisely what it was. By the way, we talk about this all the time. I'm not going to sort of beat the horse on this, but if you were manually trading this or had line trader teed up in the queue, you see that right around the high energy time we had some consolidation that had occurred right in here. Pulled back right into support, and then you had a resumption of buying here, and you could have positioned the line trader like Gary shows in the room somewhere right in here, and it would have taken the long trade at this point. So there's ways to use the tools together. You can put one shot on another screen and kind of watch it if you're just kind of learning what the trades are, what a probe is. A lot of traders, it takes a while to see these. Even if you missed that, it had a nice break swing up here, taking out this little swing level here, kind of around 23. I believe we called this. I'm not sure exactly where we called it, but we did call this, and of course we trailed to stop, trailed to stop, trailed to stop. Now what I want to show here is this. Notice, for instance, right in here, by default you have an 80 tick profit target. In this case here, it hit the full 80 ticks on the button. So you were up over $900 by this point. $800, I think it was. And you could have just stopped trading here, obviously. I mean, it goes without saying that a lot of traders would have been pretty happy with $800, and that would have been it. Now, the way you avoid getting stopped out and re-entry, and I left this on here to show this, is that you can put your profit target out at 120 or 140, and very, very rarely would it ever hit that. In which case, this trailing stop would continue up, trailing stop, continue up, trailing stop, and then it would have stopped you out probably somewhere in here, and not gone on to take this loss. See what it did? See, it took re-entered. You were up $1,000 here when it punched up to that double top up there. Remember, around 7 o'clock, and then she rolled over and broke down. So you could have avoided this by having a 120 or 140 tick target, which of course it never would have achieved, and then stopped out here, avoiding this loss. We teach how to do that in the pro webinars too, by the way. So just a little tip there. Now notice what it did here. It did flip and take the short trade. We had a nice consolidation here after the double top. Market consolidated right in here, kind of between this 29 and 30 area. Fairly certain we called shorts on the equities here. Had a nice drop. You could have shorted this here with a line trader right in here. Just put the line trader right under here. It would have broken and managed the trade just like you see. Here's the stops moving, stops moving, stops moving. And then down here, this was actually the equity peak of the day after this short right here. You got up all the way to $1,400 and change right here at the apex of the short. Now, another thing you can do if you took this, either line trader or one shot, either way, is notice the stop at this point as you were bottoming out down here was up here considerably a ways away from the price action. You can actually, I think Gary showed how to do the crank stops. Rich uses crank stops. You can crank that stop down tight, in which case a little better exit on the trade would have been down in here. See the exit? See how it came up right through your stop dots right in here? So what you could do is you could physically, on a dome or whatever, just drag that down right into here and let it stop out. And you would have saved you about maybe 10, 12 ticks on the drawdown at the end of the trade here. See it? Right in here. John, by default, if you just use the default settings on one shot, it trades one contract, which is a runner. Some of the other stealthies trade two, which has a 10-tick fixed target and an 80-tick runner. What we're saying here is that You want to extend that 80 ticks because our volatility is so huge to 120 or 140. You don't, to avoid this situation where you hit a target, stops out, re-enters the trade. And there's only two types of trades it takes, and it's a good educational tool as well as an actual trader in and of itself. It takes breakout trades, like you see here. This would have been a breakout trade, breaking through resistance or support, selling short, or a probe trade, in which case you see a probe flip here. This is a probe trade. This is called a yellow bar probe because the bar is actually turned yellow. This is really our two types of trades that are kind of the core of Viper trading. We have other types of trades too, stealthy trades. When the stealth line shows up, it gets you long on a break. But for the most part, that's the two basic trades we like to take. They're pretty straightforward. Retracement trade into support, resumption of buying in an uptrend, or breakout from resistance. Pretty straightforward. Yeah, that's by default the two types of trades that it takes. All right, okay, so moving on. Now, let me ask you this.
Oil's breaking out, by the way, Charles.
Oh, it is? Okay.
Yeah.
All right. Now, after we got up to $1,400, almost $1,500, and we had this huge 120, 140 tick run up and a big, huge 100 tick retracement, do you think we should have kept trading this? You think our equity continued up or down from here? What normally happens after we get two nice runs on the equities, or any instrument for that matter, that look like this? Coming out right off a high energy time. Here's high energy, 648. Breaks out, has a run, double top, rolls over. We catch the short. We're up almost $1,500. Should we keep trading this? That's the question. Should you continue to trade this? Consolidation, chopperoo. Do you think the equity is going to go up or down from 1,500? What do you think? That's right. You're nicely green. Lock it down. That's right. That's right. Nicely green. Yeah, that's right. What do you think is going to happen to the equity if you kept trading? Yeah, you're going to get consolidation and chop. Well, let's see what happens here. Let's go take a look at what happens here. There you go. There's your chop. It goes on, takes a trade, gets a hit, and this is what happens. This is the cycling that you see in the market, right? Look what happened to your equity. It went from $1,500 all the way back down here to 1,000. Actually dropped a little more than that. See it? So to avoid this, of course, after you catch two big runs, and by this point you're almost an hour after high energy, this is the time to lock it down and stop trading. Okay? If you want to let it take one more trade, you can let it go take one more trade, which will cost you $150 if it stops out, and once it takes that loss, you lock it down. Now, if you did let it run, you did get another chance to get out over here because it did flip and take the short. Occasionally this will happen on a follow-on run like this, where it'll come down, take a couple of hits, and then boom, back up she goes. So you had another chance to get out down here if you let it run close to the 1,400 equity mark. Okay? All right, any questions on one shot running high energy on EMD today? I got a couple other charts to show here. Any questions on this? I've got like 3-4 other charts I'm going to drag over real quick. I'm not going to go through all those trades in detail like this. A lot of them look the same. Here's the Russell. Call this the Roosty TF. It's the Russell Futures. So you're going to see very similar trades coming off of high energy. Of course, you see it took a long trade here on a Proby. Broke out, ran, hit a full profit target, same thing, rolled over, stopped out, took the short. High, got up to around 1,400. Not surprising. This trade's a lot like EMD, $10 a tick, so you can see that this was about pretty close to the numbers you saw in EMD within about a couple of 5 ticks, very similar. Rolled over, got stopped out a couple of times, flipped, took the short, and then the final trade was over here. You got another chance at 1,400 right here. NASDAQ, very similar. Want to show NASI here. This is $5 a tick. This is if you're beginning or on a free trial or just kind of learning how to trade. Here again in the beginning of trading the futures market, the focus is not really about making a ton of dough. The focus in the beginning as you transition from demo paper money into live trading in a real money account is to learn the system and try to just get break even or consistently slightly positive, profitable, and get over the nervous jitters that we all have when you're learning how to trade. Everybody learning how to trade, you get a little nervous, you feel tickle in your stomach, you get a little sweaty palm. The whole idea of doing this trading right now is to get through that. You got to get through that and not focus so much on the money. The money will come eventually. If you learn the system. Yeah.
Let me just interrupt a second. If anybody took that short at 684.50, or again on the in the Russell, or in the EMD, or in the Nasdaq, cover parts down in here. Part of your profits. Take some profit here.
Yeah, let's flip over to the real-time chart and see what you're talking about real quick here. Here's EMD. So this was, I believe, what Rich was talking about here. Here you had a little bit of a retracement like such. And then
Well, EMD already had hit its first one earlier on the first one, and it came back. And then after that, we had our other setups in the Russell at 684.50, Charles. 684.50 was the short.
684.50. Let's come over and take a peek at that. Okay. Oh, right up in here.
Yeah.
Uh-huh.
And then 21.22.75 we called in Nasdaq.
So this is the short that Rich is referring to.
Yeah. And so when they just pulled back here, you want to take some profits in there and then go to break even.
Yeah, we just had a high energy time too.
Okay.
Mm-hmm.
All right. Just wanted to say that.
All right. Yeah, 8:28 was a high energy time. That was 3 minutes ago. So got a little poke up here on the equities. Okay, here's another one we like to trade. We don't really track it in the room, but I just thought I'd toss it up there. It's the YM. It's the mini Dow. It's also $5 a tick. If you're not partial to NASDAQ and you're looking for an alternative that's kind of a little bit lower risk, YM's a good alternative for you. $5 a tick. Here it took very similar trades. I'm not going to go through them all. You can see obviously it did not hit a profit target, by the way, 80 ticks. Did catch the nice short. At this point here, you were up $400 or $500. Trading one contract on YM or NASDAQ, I can tell you straight up, when you get up into this $400, $500, $600 range, pretty much want to lock it down. Pretty much want to lock it down. Those are good. I mean, do the math. That's 100 ticks at $5 a tick. $500, that's a good morning. If you did let it go on, of course, it got stopped out, took the short, stopped out here, and you ended up about 330. You got another shot at 500 here. So you can see it's about half. Now, the flip side, of course, is that it's half the risk. I mean, you can do the math, right? 15 tick stop on $5. Your initial risk here is only $75 on a trade if it stops out, $75. Whereas a full stop out on EMD at 10 ticks or a 15 ticks at $10 a tick is $150. So you really have to look at your account size and your comfort level with risk. Here again, not focusing so much on profitability, but learning the system, learning where a breakdown or a breakout trade is, learning where a probe trade setup is. And the one shot is a perfect tool to do that. Now, the last chart I want to show is the dollar index, trading at high energy time. And so this is firing up one shot on the dollar index. The dollar is also $5 a tick. It's a good little instrument to learn. I mean, there's quite a few traders. Hardy in our room, for instance, he's been with us for a while. I remember back when he was just starting to come to webinars and just learning the system. I don't want to put words in his mouth, but you know, he struggled like everybody in the beginning, and then learned the system, and he's found an affinity for the dollar index. This is an instrument he just tracks every day. I don't know how many contracts he trades now. He's probably, who knows, 2 to 5, 10, I don't know how many, but he started off with one, I would guess. In this case here, for instance, I wanted to show this loss it took right out of the gate. Here it got a pop. It thought, one shot, took the trade thinking this was a break. See how it broke support. This was a breakdown trade that it was looking for. So you were down $75. Most traders that we talk to can afford a hit of $75 on one trade. So you were down here. Okay. In fact, that's the book close P&L is the minus 75. From the short right here. See. But now notice what it did here. It flipped and broke out very nicely right here. Here again, once you saw this trade taken, you could have put line trader right here, and line trader would have taken it anywhere on the break here, for instance, say 94, 95-ish. Had a beautiful textbook breakout trade there that one shot went ahead and took. This is a nice automated little friendly over here. You can stick it in the corner and watch it take the break. Sometimes you watch it and say, well, I didn't even see that breakout. And you come in, you pull the trigger, market order, limit order right there. And right now, if you had let it continue to trade, you'd still be in this trade and you'd be up to $2.25, $200 with the stop trailing right here at 74. Now, we teach in the webinars that a good stop posture is to put the stop somewhere, sometimes pretty much kind of between the stop dots and the stealthy line. Because there's a lot of times where the market will come down and test support, and then run another 10, 20, 30 ticks. So you don't want your stops too tight, and sometimes you can have them a little too loose. So what you could do here on your dome or on some other tool, you could drag up your stop into here. This is the, well, here again, the drawdown at the end of the trade right here. This would be your drawdown. So you were up 200, 250. Okay, now it's retracing. Here's the retracement. And if you trace down to here, I'd guess you'd be up, say, 180, 190, 200. If you come down to here, you're going to give up another, I don't know, 8 to 10 ticks. So you can drag your stop up. You can let one shot manage it. You can let the line trader manage it, or you can take it upon yourself to drag the stop up a little tighter. Or, of course, if you were happy with the 250, you simply come in, close position. That's it. Now, if you're going to close position or hit market close, it goes without saying that you have to toggle these two off, because if you don't and you close it and the conditions are ripe for another trade, it will go ahead and take another trade. If you don't want to do that, of course, toggle those off on your buttons. Okay, now I'm going to go over and answer some questions on the website. Any questions on one shot on the charts that we've shown here? Okay, we have a question from John coming in here. John is saying, asking the question here, I see why it took the breakdown to go short because it broke support. So he understands why it took this trade right here. And of course, we see why it stopped out at 15 ticks. It hit the stop, and we were down 75. Now, over here, it took the break to the upside because the market was breaking through resistance. So much like this break of support on the short, it took the breakout long here. See it breaking out through resistance? So it only takes two trades, two types of trades. It takes probe trades like you saw on the EMD chart and those other charts, and it takes breakout trades and probe trades. That's pretty much what it takes. So if you're learning how to take those trades, this is a great little trader to watch, and it comes with our the mid-range deluxe package. Let me go ahead and answer some questions on the pricing real quick before we wrap here. Pricing is right here on our home page. And in a nutshell, in a good way to tell the difference between the three, we have a little sort of comparison chart down here. You can scroll down to the bottom. Standard package, you can see what it has. It has the indicators, it has the room. Of course, it has support. It doesn't really have any auto traders associated with it. This is sort of the base package here. Stealth indicators, trading room, and webinars. Okay. The mid-range package here is everything you get in standard, plus you get the high energy times, high probability trades, and the one-shot auto trader you see right here. So that's the mid-range package. A lot of traders like this. It's kind of in between the base package and the full boat. And then, of course, the Pro package has everything in it. You've got everything from the first two, the indicators, trading room, high energy times, probabilities, one shot. Of course, now you're tossing in the all the auto traders, which is the Stealth Auto Trader and all the other auto traders. It's got the Forex dashboard. If you like Forex, it shows 15, 16 markets at a glance. Of course, it has the oracles that you see in the room that Gary and Rich show all the time. It's got the dollar index, 6E, the currency future oracles, which has those 3 duck trades. Very high probability trades coming off those oracles. And of course, it has the trendline trader, which I think most everybody has a free trial on right now. And I think Gary showed a couple of trades live this morning using the trendline trader. So the Pro package has everything in it. Pretty much, if you're going to want to trade for a living, if you're going to do this professionally and you want to transfer out of your job or you want to pick this up and do it, you're going to want to go with the Pro package because this has all the tools. If you're not in a position to step up to that just yet, you could go with the Deluxe. It has the one shot. It's got the high energy times. And, if you just like the indicators and you want to come in the room, then you can go with the standard package. That's good also. All 3 are good. And the reason we have 3 is because we have different, obviously, levels of traders with different experience and different capitalization coming in at different levels. So that's why we have the 3. The futures dashboard, I don't know. Rich, do you have that uh, handy? Somebody asking about the futures dashboard. I don't have that on this particular machine right now. But
Yeah, I can. Let me just finish up on managing one thing here, so hang on a
okay,
second.
yeah, take your time. Any questions on the pricing here? What's included with each package? You can just scroll to the bottom of the pricing page and see this little comparison spreadsheet here. It kind of tells you across the board what's in each one. Pretty straightforward. I think there was a question over here on one shot. What does this LE and SE mean? This is showing short entry, one contract at 73.75. SX1 stop loss, stop out at 73.8250, which is 15 ticks. LE long entry, one contract at 73.90. So that's what those mean. Yeah, that's what those mean. All right, so interesting here, if you had your stop sitting at either this level or this level, you would still be in long on the dollar here. You'd still be long on the dollar. Just curious, Hardy, if you're still here, are you still in this long dollar trade? You got a stop sitting up in here somewhere? Call it 74, maybe 07 or 08, kind of right in here between Stealthy and Hardy's still in it, trailing the stop. Carlo, what in the base package, what you get for the indicators are as follows. You would get the background script, which colors the backgrounds, and also shows the arrows, which is the trend indicators. See the arrows up and down. You get the bar coloration, which is red, blue, or yellow. Of course, you uptrend, you have green, and you get the green stealth indicator, which is this sort of thick, chunky line right here. That's the stealth indicator. So basically everything you see on the indicator package is right in here on all the basics. And then you get the access to the trading room and then, of course, all the webinars. By the way, we do have on the site, let me just show this real quick here just to let you know if and when you do decide to sign up here. Come back to the home page here. And you scroll down here to the bottom under trading webinars. We have a few loaded on the site that are pretty much open. You can download and look at those. We also send out recordings periodically to everyone to kind of take a look at. We also have subscriber access right here. And you're looking at the recordings right here. This is the subscriber access when if and when you would decide to subscribe or sign up here. This is all the videos that we have online for training. I think you're talking about probably over 200 hours of training here. Basically, this is all the webinars. This is, you can see here, from August 20th all the way back here to December 4th of last year. Trading webinar recordings, support and resistance, breakout, probies, probably 100 plus hours here. Futures and Forex, recapping, scalping. I mean, anything you want to learn about trading the system is pretty much here. And then all the pro webinars are recorded down here. Here's the one from the other night. Here you got basically all the way through, I think, December of last year. Yeah, December 6th of last year. So all the auto trading, different parts, pro package, how to set up the settings, how to position the line trader, how the one-shot works, what the stealthy trader is. It's all here. And one of the things that's really nice about this that traders really like is that, once you get access to this, you can watch these anytime, as much as you want. Download them and watch them as much as you want. We have traders that in the first few weeks or couple of months of learning how to trade will download several of these and watch them multiple times. And we find the traders who take the time to do that actually turn out to be profitable, like you see in the room here. So, this is a lot of training here. I mean, you're talking about hundreds of hours of training. Makes a big difference. How long to get through training, Steve G? It really depends on a couple of things, a couple of factors. I think you heard Gary say something about baggage. It's kind of a funny, ironic twist about trading. Sometimes we find some traders that come in that are experienced sometimes have some baggage with them. I think he tossed out some indicators like MACD and stochastics, and you can almost get paralysis by analysis with so many indicators, right? But I think you can see here that the system is pretty simple and straightforward. I would suggest that if you went with a deluxe package with the one-shot, high energy times, and just went for the mid-range, and then turned on one-shot and watched it, plus watching the webinars, I'd suggest at least 4 to 6 webinars, at least. I'd say within a few weeks to a month or two, you could be trading profitably in a live account. With some due diligence and a little bit of learning of some of these price patterns, pretty straightforward. Even on a small little contract like the dollar index or NASDAQ or YM or even 6B, which is only 6 1/4 a tick.
But Charles, let me just chime in a second. Just from my perspective, I know it's another $99 for the Pro package, but in my opinion, the return, the extra return you get for your $99, to me is astronomical. First of all, you get the oracles. If you trade any currencies at all, that's really going to help you. Okay, just one of those oracles alone will help you. You get the line trader, which you see is just a great tool as far as working back and forth. It enables you to get into trades, and of course you get the rest of the strategies. But just those other features alone, I think, for the little extra cost, and you can basically make that up, in about maybe a minute in a trade. To me, if you're serious about it, you should really seriously think about stepping up to that. If you're really serious about trading, making money and trading professionally for a living, in my opinion, that's really the way to go. And I base that on all my years of experience. I'm sure you guys would concur as well. It's always a cost-benefit analysis, but for me, that last $99 is not much of a cost in relation to the benefit you get. But anyway, I guess.
Oh no, I agree with that, and that's why I was showing all three here, Rich. I think by far in terms of return on your investment as far as trading goes and subscriptions go. I mean, if you scroll down here on this little comparison spreadsheet down here, you can see that you get the full Monty with the Pro package. So if you're serious about trading and you really want to do this for a living, Rich is right. The extra $99 is really worth it, especially when you're talking about the oracles, the trendline trader, and all the goodies you get here. Absolutely. All right. Any final questions before we wrap up the session here?
Charles, I can show those dashboards too, by the way, if you like.
Sure.
Somebody had asked about them, so let me just give me 1 second if you want to field a couple more questions, and I'm going to just shoot back over.
I've actually got that up, Rich, if you want.
That's not a problem, Gary. I got both of them here. I've got
sure.
the futures and the forex, so I could show both. So let me just go ahead and do that. Then
Okay, sounds good. I'm going to step away for just a second, guys. I'll be right back after you flip
All right.
over to Rich there.
Okay. Okay, they're going to be coming up here in a second, and here we go. Over here on the left, these are this is the futures dashboard, okay? And so what you see over here, if you're a futures currency trader, you have the dollar index, and you have the 6E, which is the euro, you have 6B, which is the pound, 6S, which is the Swiss, 6C, the Canadian, 6A is the Aussie dollar, 6J is the yen, and then 6N, of course, is the New Zealand dollar. The New Zealand dollar is not traded too much on the futures basis, so you've got to take more of a swing position trade in that. But these are very liquid, and you can see right now, what is the weakest in the group? Well, just by looking at this, you can tell the Swiss franc is the absolute weakest. These are really, really weak numbers. If you were to put a Swiss chart up, you would see what I'm talking about. But negative 6.8 and negative 7.9, almost negative 8 on a short-term basis is extremely weak. Okay, so all of these are very weak. Now, what you'd be looking for, let's say we're looking for a potential hook trade setup. What we'd be looking for is on a short, would be looking to see if this is red down here with the red background, and then we would look for this to turn green. That would be our tip-off. So like if you're trading all 6 and you just want to trade hook trades, this is what you'd look for. You'd follow this, and then once this turned green, you would go to your chart and look. Okay? three ducks would be you would wait for example, when this turned red and this was red and then your background is red, that's your trade. But of course, you'll see that on the chart as well. If you put up the indicator, the oracle, you'll see that on the chart as well, charted out. Now, over here is the Forex. We also have these for the Forex. This is 16 Forex pairs. And the Forex pairs that we have, it does the same thing, both the short term and medium term, is we have two cross pairs on the two pairs on the Aussie. That's the Aussie US and Aussie Yen. You have 6 over here on the Euro. You have the Euro Aussie, Euro Canadian, Euro Swiss, Euro Pound, Euro Yen, and Euro US Dollar. All right, and then over here on the Pound, it's got 3 cross pairs on the Pound. Pound Swiss, Pound Yen, Pound Dollar. You've got the US Dollar Canadian, US Dollar Swiss, the US Dollar Yen, and then the New Zealand Dollar, which is much more liquid than the futures over here, much more liquid. A lot of our people trade this, and then the New Zealand versus the Yen. So that's the way it is. Right now, you've got either the, and of course when you get the Pro package, you will get both of these dashboards. You'll get both the futures and the Forex dashboard. So I hope that helped explain and show what that was.
Did you, go ahead, Gary.
Sorry. Stephanie, on your question, yes, the dashboards are actually the oracles in dashboard form. That way we can watch those. You just keep it up on a separate monitor, for instance, and watch for those hook trades or watch for these, monster moves, and then watch for some kind of a pullback if you already missed it. They're great.
By the way, if you're done there, Rich, I have one last thing to show.
Okay, I'm done.
All right. Let me come back over here. Hold on a second. Okay, let's see. You should see a NASDAQ screen right now. All right, so this is another important thing that we teach in the webinars, but let me just go ahead and address it now, because a lot of traders really struggle with this, and it's really easy to see. And what I'm talking about is being able to identify either trending or consolidation in real time. A lot of traders say, well, I see you look back at this chart, and you see it was long and short and blah, blah, blah. It was easy in hindsight to pick these trades out. Hold on one second. So let me ask this question. Right now in the market, this is live data. Can we tell if this market is trending or not? And could we have known from some other, when do we know it was not trending? Let me just toss that out there. Can we tell if it's trending or not in real time? And when do we know it was not or trending? How do we know? Anybody tell on this chart real quick? This is the last question I have. Well, let me help you out a little bit. I see some answers coming in. It's absolutely sideways. So here's what we look for. Just in a nutshell, this little tip alone will help you a lot. Here we have a swing level right here. A swing level is where a market comes to and bounces or retraces or hits its head at resistance. Notice over here around 8:30, we have another swing level like such, right in there. Now, is it possible when you got to these points to do this? Put a line here and put a line here. So essentially you can see here that at this point in time, call it between 8:25 and 8:30, at this point right here, we had some swing levels that were defined. Notice we're not taking out resistance levels to the upside, and we're not breaking support levels to the downside. Everybody see that? Now, let me ask you another question, this final thing. You see that? Everybody see that? See how clear that is? Just took, what, 2 seconds to do that, literally, 5 seconds. You quickly eyeball it. Doesn't take a lot of work. And then what you do is we're going to wait for a high energy time somewhere down the road where perhaps the market would push higher and break out of resistance, or take out support and head lower like such. But, you know, obviously you're not going to take a trade in the middle of a range because you got a 50-50 shot that it's going to go to here or here. So obviously it goes without saying you're not want to get long or short right in the middle of a range. Everybody sees that, right? Essentially you're trading between 14 and 24. That's 10 times 4, about 40 ticks, about a 40 tick range. That's right on the cusp of tradability. Anything around 20, 25, 30 ticks, plus or minus a few ticks, very difficult to scalp inside of here. I mean, we have traders that go down and use smaller range charts, three ticks, two range charts, try to scalp top and bottom, buying support and resistance. But if you're not a good scalper, strongly urge you to stay out of this chop. Now, how do you avoid head fakes like this? Last thing, how do you avoid head fakes? If this was a legitimate break to the downside, this stings a lot of traders. You wait for the break. If this is a legitimate breakdown, you should get retracement to resistance, and then it should break down like such. That's when you take the trade. That's all I had today. Any final questions? Thanks for coming, everybody. We do have a